Howdy, howdy, and welcome to another episode of the Denver Green Living Channel. You know, the market has shifted. Sellers are got used to the idea of like, oh, I'll sell my home, and by the end of the weekend, they'd have a bunch of offers, and that was it. Well, things are a little bit different. And so, whether you're a seller or a buyer, you're going to want to tune in to my talk today with Brittany Holliday of Success Lending, because we're going to be talking about the secret weapon of seller concessions and how it's a great tool for both the sellers and the buyers to have a win-win in this market. So, Brittany, thanks so much for joining me.
Of course. Thanks for having me.
Before we dive into the seller concessions and how that all works, I wanted to ask you, how did you get into being a mortgage officer? Like, what brought you to this path? Because you're in Colorado Springs and you work in Colorado and some other states, but what brought you to this?
So I actually spent the first 10 years of my career in the automotive industry. I've done car sales, but mostly I was a service advisor. I managed a few local performance shops, all that fun stuff. But I got really, really tired one day of the 12, 13, 14-hour days, no lunches. And I was also just tired of always being the bad guy. So I started actually working on getting my real estate license and got super discouraged because it just didn't interest me. So I went to one of my realtor friends and I was like, hey, I want to get into real estate. What do I do? And she was like, you don't need to be a real estate agent. You don't have personality for it. She's like, so you need to go into mortgage lending. And I signed up for the classes and the rest was history.
Wow, what a great friend.
Yeah.
It's that kind of
Blatantly
friend that,
honest.
yeah, that tells you, you've got something on your tooth. Like that
Yeah.
kind of person that's like
Yeah,
the thing that you need to hear. Well,
exactly.
cool. Awesome. So, okay, so today we're going to be talking about seller concessions. And, I was just talking to somebody earlier this week that's in another state, a family member, and he was saying that his house has been on the market now for like 40 days and he's not sure what to do. And, so I was saying, hey, well, did you think about seller concessions? And he said, what is that? So I was like, well, this is a perfect topic to discuss with Brittany, because we were thinking that this would be something that people should really know. So let's just define what seller concessions are and then walk through a couple examples and talk about why. Maybe should we talk about first, like why they're even needed,
Yeah, the
or
big thing,
what they are, maybe.
yeah. So really, we'll kind of bundle it all into one. A seller concession is they take X amount of dollars out of the proceeds of their homes and slide it back over to the buyer at the closing table, is really the best way to sum it up. So, for example, if you are purchasing a house for $450,000, but they are offering seller concessions of 10,000, the seller will now walk away with $440,000 and the buyer will have $10,000 to put towards their closing costs, buying down the rate, so on and so forth.
Okay, perfect. That's a great overview, right? So a $10,000 seller concession is just basically the seller taking part of their proceeds and sending it back to the buyer. But the cool thing is, it's not just a price reduction, it actually can benefit the buyer in a lot of interesting ways. So let's talk about that case first. I think most people, sellers and agents, would say, well, let's just drop the price. So could you explain that option, and let's look at that as kind of the basic thing, and then we want to show how these more creative concessions would work.
Yep. So, I'm here in Colorado Springs, and there have been a decent amount of houses that have set on the market for more than what we are used to. Now, there's no indication on my end saying that, a house sitting on the market for 30 days is unhealthy by any means. That's pretty normal before COVID. But we're seeing a lot of people still wanting to get their houses moved as quickly as possible. So we're seeing, $5,000 reduction, $10,000 price reductions. I saw one the other day that was a $20,000 price reduction. And those are huge cuts to be taking out of, when you think that you're listing a house for 500, whether we admit it out loud or not, we think, okay, cool, I'm going to walk away with X amount of profit. And then the house doesn't sell. So now we lower the price by 10,000. We're like, okay, now our profit's this much. We lower it by 20,000. Now we walk away with this much. So, and that's all about expectations and a whole nother conversation. But we are still in a market where rates have gone up. And purchasing a house at the prices we're seeing them at is very difficult for a lot of people. Even with very strong income households, it's proving to be kind of difficult because we all have debt, like car loans, student loans, credit card debt, little stuff like that adds up. So with the higher purchase prices and the higher interest rates, it makes it somewhat difficult to qualify, or somewhat, just difficult to say, I'm comfortable with this new mortgage payment. So one thing that we've all kind of gotten used to seeing is the purchase price reductions. And we all look at it and we're like, well, that's still a really expensive house. So one thing that is super beneficial is if we offer a $10,000 seller concession instead of a $10,000 purchase price reduction, then we can allocate those funds in different ways. So one, if we simply lower the purchase price by, say, $5,000, so if we take a $450,000 list price home and we lower that purchase price to $445,000, your monthly payment will be reduced by roughly $27 a month. So $30 a month, that's great. But if we take that $5,000 and put it towards buying the interest rate down, so I ran a scenario, $450,000 purchase price, FHA loan, 700 FICO score. As of today, the rate would be at 5.5%. If we spend $5,000 to buy that rate down, we get to roughly 4.99%. And that's a monthly savings of $137 a month. So that $5,000 can be allocated to really bring your monthly payment back down to maybe where you're more comfortable at, maybe to where you will qualify more easily. That's a lot of money.
So I was just jotting the numbers down as we're talking. So if somebody did a $5,000 price reduction in the scenario that you talked about, then the buyer would see a $27 per month benefit for the life of the loan. Because this is the other thing, is that we're talking about, that $27 per month, that's related to the purchase price. So you're going from $450 to $445, you gain $27 per month. But if you instead use that $5,000 to buy down the interest rate for the life of the loan, then the rate is going from 5.5 to 4.99%, given this example, today's rates, and it saves you $137 per month. So that's like more than four times better impact for the buyer, and it's the same investment from the seller.
Exactly.
So that's a pretty cool thing. And I was going to also ask you, Brittany, so I know that, and I did another video about doing a 2-1 buy down. How would you compare this approach, which is the life of the loan, compared to the 2-1 buy down approach, which is buying down the interest rate for 2 points for the first year and 1 point for the next year?
I think that they both have a time and place for themselves. I think that, the 2-to-1 buy down is great in some scenarios. And I think that for a longer term buy down is great in some scenarios too. Every borrower is different, every scenario is different. I think that they both have a time and place at the end of the day. So, really, you have to step back and kind of reflect on your particular scenario. How soon do you think you might be refinancing the home? How long do you want to stay in the home? There's a ton of factors, but I think that they are both great options and they both have a time and place.
Okay. All right. Well, this is great because I didn't actually know about this lifetime of the loan and what a big benefit that was already. But I think, the reason we're doing this video is to give you that idea about seller concessions and not give you the answer, but the questions that you can then reach out. If you're the buyer, ask the seller, ask your agent to ask the seller about it. If you're the seller, talk to your agent, and for sure be reaching out to your lender. And we'll have Brittany's contact info here so that you can run the numbers for your specific case. This is just an example. And I think that your dog was like, yes, that's right. Just chiming in, say, yeah, those are both great examples. You just have to know for your situation. Okay, so so we were talking about a scenario where, let's say that the seller says, okay, well, I'll do $5,000 for the interest buy down, but I also want to make it easier just for the person to get through closing. So how does that example work? And can you use it for a down payment, or what exactly if the seller wants to make it easier?
Yep. So what we're seeing is pretty popular right now is that $10,000 seems to kind of be a comfortable, popular number. So in the scenario that we ran, or the example we gave, we did $5,000 specifically towards buying down the interest rate, which you could see made a huge difference. Now we could spend that other $5,000 if the seller's doing the 10 grand. We could see that other $5,000 come in and we could buy the rate down even more. Or we can use that other $5,000 to go towards the buyer's prepaids and closing costs. So when you are buying a home, you have kind of a couple of different types of money that you have to bring to the table. So you have your down payment. Depending on the type of the loan, it may be 0% if it's VA, it might be 3.5%, 3%, 5%, 10%, 20%, whatever that might be. So the seller concessions cannot go towards the down payment itself. But then on the back end of that, you have your prepaids and your closing costs. So you will have your, title fees, your origination fees, processing fees, all of those things are going to be your closing costs, which are usually, I normally calculate roughly 1% of the loan amount. So that might be, $4,000, give or take a little bit. And then you also have your prepaids, which is setting up your escrow account for the first, several months. So that is going to be very property dependent. It depends on the property taxes, the homeowners insurance, all that stuff. But either way, you end up having, $4,000, $5,000, $8,000 maybe, depending on the property, that you have to bring in prepaids and closing costs on top of your down payment. So you could reduce the money coming out of your pocket now by another $5,000. And that is a huge amount of money for people too. I know that's a lot of money for me. If I can bring in $5,000 less to the closing table, I'm going to be really happy. Plus my payment's now lower. So, I am ultimately saving money all around. I can put that $5,000 in a savings account, that, $137 in the savings account every month. And I could replenish my savings account pretty quickly. So that's kind of how we're seeing a lot of it, these seller concessions being allocated. It's kind of towards rate buy down, and then the rest of it goes towards just reducing the cash to close.
I love this because there's just so many great things about it. If for one thing, if you think of a buyer who's looking at there aren't two equal homes, but let's say there were two equal homes, and one said, okay, they're thinking, well, let me just offer $10,000 less and see if they'll take it. But if you ask them, hey, how about doing seller concessions? Or better yet, maybe they put that in the listing that says we'll offer that 10,000. Then you're getting the lower monthly interest rate. So that means maybe makes it easier for you to qualify or to just manage it. And then you don't have to worry about your closing costs, your prepaids. And what are prepaids? Can you say a little bit about what are some of those? What is that actually?
Yep. So your prepaids are going to set up your initial escrow account. So your escrow is part of your monthly mortgage payment. When you get your statement, you'll see escrow of, let's just say $300 a month, just to be easy numbers. So a certain percentage of that will go towards paying your property tax bill. They'll set it aside kind of in like a savings account, if you will. And at the end of the year, when your taxes come due, your mortgage servicer will pay your property tax bill for you. And then the same goes for your homeowners insurance. A certain amount of that $300 a month will go towards your mortgage insurance premium. At the end of the year, when it comes due, they pay that. But to set that initial escrow or almost like a savings account up for you, you have to put an initial deposit in. So it's usually 12 months of your homeowner's insurance policy because they typically want to see that being paid immediately. They don't want you to just set up monthly payments. You have to pay your first year up front. And then we usually collect, depending on where we're at in the year, several months of property taxes. That way, at the end of the year, when your tax bill comes due, we already have that and we've already been working on replenishing for the next year. So those are really what your prepaids ultimately boil down to.
Okay. And then I think people might think of other things like water bills, or, maybe you paid your electric bill or your HOA bill in advance. So does that come out of the closing costs? So that settlement, like if let's say the seller paid for a year of HOA, now the buyer needs to pay part of that.
So typically all of those will be fees that are separate from your mortgage payment itself. So typically that type of thing will not be rolled into escrow. It's a bill that you have to settle up outside of your mortgage payment. So you'll get the mortgage statement, and your mortgage payment at the end of the day covers your principal, interest, taxes, and homeowners insurance and mortgage insurance if it's applicable to your
Okay.
file. So if they have an HOA due or their water bill or metro fee, they'll typically get a separate bill in the mail that they will have to send a check out separately for.
Gotcha. Right. So there's just lots of little places that, and you're moving into even if you're not doing anything fancy, maybe your couch no longer fits or something like that. So you're going to have some other expenses. So this thing of having a lower payment and not having to have used all of your cash is great. And as you were saying, I think a lot of sellers really appreciate, for example, they really want to support vets. And so veterans. And so if a vet has a VA loan that has a zero down payment, and they can also help them out with closing costs. And, there's a lot of things on fair housing where they may not, they're not really choosing the person, but with, just being able to make it easier for folks to get into homes, because I think a lot of us are seeing that people of all ages are really having a hard time affording houses right now. So I think seller concessions is a great way to make homes more affordable for the buyers, just because it feels really good, but it also makes your position as a seller more competitive, more attractive.
Exactly. And if you're facing, your house has been on the market for 15, 20 days, you've had no movement, and you are reaching the point where you're ready to do a price reduction of $10,000, then, it's a good option. It's good to say, hey, look, I can make this home. Yes, the $10,000 price reduction is great. And for, a large percent of the population, they will simply they would prefer the 10,000 price reduction, and then that is totally fine. Because it's at the end of the day, financing less money, you're buying the home overall for less. And that does make sense for a lot of people. But some people, that $137 a month, that's half of my personal grocery bill. So that makes a huge difference for a lot of people. So, if you have as a seller that flexibility and you can, show that and project that out to these buyers that, hey, I'm creative, I'm open to other options. I'm not just a cut and dry, let's just cut the purchase price down. And maybe you cut the price down by $5,000, give $5,000 in concessions, whatever. I think that it helps buyers feel a little bit less defeated at the end of the day.
And probably sellers too, because, especially after this crazy thing that we just went through, I think sellers and probably agents too aren't really used to doing all the stuff that it takes to get a buyer to really make an offer and follow through with buying your home. So this is just one way to attract more buyers and get that home sold so that you can do whatever it is, whatever reason that you put it up for sale to start with.
Yep. I think that we are, approaching a time where we have to get creative, and creativity is not a bad thing. But the past few years with how the housing market's been, everybody's expectations changed. Their comfort levels changed. What we got used to was very different. And I think that us shifting back, towards a more neutral style market is very uncomfortable for all of us. I know it is for me. I'm going through the process of buying a home now, and it's absolutely terrifying. But getting creative and having sellers that were flexible and were kind of like, okay, well, let's move some money around here, and all that stuff made it a lot more attainable for me. Because when you look at, I've been saving up for all these years to have, a down payment and all that, and you're like, wow, I'm going to really drain all that money. And what if I want to go in and paint? What if that sofa doesn't fit? And, there's a lot of things that you're like, well, I don't want to finance it. But, just having that flexibility of leaving a little bit in my savings account, and my monthly payment's going to be a little lower. Yes, the house could have been price reduced for, less money, but that wasn't what was important to me personally. And that's not what's important to a lot of people out there. So, just that flexibility, the creativity, makes things a lot more attainable for a lot of people.
Yeah. And at the end of the day, when you're a buyer is speaking with a lender, they can go through all these different scenarios. And a lot of it, depends. If you're thinking of moving in 5 years, then you might make a different decision compared to, oh, this is our forever home. And, so having those kinds of discussions with your lender about your own situation and your preferences can really help you sort all of this out. And the other thing I wanted to say is, just like as a comfort to sellers, let's say that your house is on the market for 30 days, 45 days, and it hasn't sold. You can ask your agent to look at the statistics for your area. I know that we have some different kind of rules of thumb. It may be different in your area, it's probably changing week to week, but I know I was in a meeting a couple of weeks ago, and the number was something like it's taking 16 showings for a house to get an offer. And it was an average of 2 to 3 showings per week. So, when you look at the math, around 45 days or something is not really out of the norm. So taking a bigger look at your market and what's happening now can also help you figure out, is your house really out of the norm, or is this really just typical for what's happening in the market? That can give you, I think, a chance to breathe a sigh of relief, and you don't need to overreact, but yeah, get creative. You can speak to the seller, and seller's agent could also speak to a lender to get some ideas for what kind of concessions and how those benefits could flow through.
Absolutely. And I can say too, like I said, I'm in the process of buying a home myself. And we were primarily looking at homes that had been on the market for 30 to 45 days because, those were homes that we saw the value in. They had already gone through several price reductions. And I was like, wow, I really like this house. This is a good price point. And we looked at probably 3 or 4 houses that had been on the market in that time frame, and we submitted offers at ask price. And it was enticing, or it was starting bidding wars. And so we were still going into bidding wars with the way the market has shifted, because it seemed like that 30 to 45 day time frame was a sweet spot to where we were putting in an offer, but so was everybody else. So as sellers, don't get discouraged. It's just a little bit more patience is needed in this market now.
And, on the other side, buyers, I want to say don't get overconfident, but, just realize, you still could be in a bidding war later. So if you find a house, you love it, it's going to work for you. And, you've maybe figured out that some of these concessions can help you get in there. There still could be a bidding war. So don't delay and don't worry, you can always move if it's not the thing that you want for the long term. What we're seeing is, when you get in a house, you tend to be experiencing appreciation. And even people that bought right before the crash of 2007, 2008, if they hung on to their homes for a few years after that, they were back to an appreciated value. So, if this is what you want to do, is own a home, then don't be discouraged. Use some creativity, get out there and make it happen and start generating that, that generational wealth for your family.
Absolutely.
All right. So if anybody has questions, they want to reach out to you, we've got your contact info there. How's the best way to reach you?
I am very, very flexible. You can call me, you can text me on my cell phone, you can email me. Everybody has different methods of communication that they prefer. I have everything tied to my phone. So if you want to email me, shoot me an email and I'll get right back to you. If you prefer call or text, my cell phone is there too.
Awesome. All right. Okay. Well, thanks everybody. I hope this makes you feel better, that you have more options and what the heck are seller concessions, what is interest buy down, what are closing costs and prepaids, and how that all works together. So thanks so much, Brittany, for joining us.
Thanks for having me.
Really appreciate it. All right. Thanks everybody. And I hope to see you soon in the Mile High City.